So we're waiting for slightly under 1 minute before we start proper. Welcome everyone who's joining. Hello again, and welcome to our online webinar, where we are going to discuss investment and fundraising in FemTech in 2022. This webinar is organized by FemTech Analytics. My name is Kate Butts. I'm a director of FemTech Analytics, as well as managing partner at Deep Knowledge Group. This webinar is being recorded, and we are going to distribute the link once we finish to those who subscribe to this webinar. We encourage our audience to ask questions in the chat box, whether during the presenters' talks, as well as especially during the Q&A session. I'm delighted to introduce our moderator, Dr. Ksenia Tugay, who is a FemTech enthusiast, as well as a health advisor to a Swiss FemTech startup, PhenomX. She is also an innovation expert to a leading Swiss health insurance company. Ksenia holds a PhD in life sciences from University of Lausanne, Switzerland. She also has extensive business background, along with many years of experience in managing various innovation programs. Ksenia is passionate about innovation, entrepreneurships, and women's health. Ksenia, welcome, and thank you for being here.
Thank you very much, Kate. It's a pleasure to be with FemTech Analytics again. Thank you for a very kind introduction. Hello, everybody. Welcome to our event, Investment and Fundraising in FemTech in 2022, that brings together leaders, founders, organizations, startups, and visionaries who play a crucial role in solving complex questions in FemTech industry. I would also like to highlight that a new report by FemTech Analytics is available now. It's called FemTech Industry Landscape Q2 2022. And report contains a lot of information about the FemTech sector, a look at the next generation technologies, and a lot of information about FemTech companies. I also encourage you to look at the chat box for the link for the report. Also, feel free to introduce yourself. Please use the chat to ask your questions, to also interact with the speakers. As Kate said, the event is being recorded, so if you want to rewatch it later, or if you would like to share it with some people in your network, please go ahead. And with that, I propose to get started with our first speaker, and it is my great pleasure to introduce Bethany Corbin. Beth, it's great to see you again. She will tell us about top legal concerns for female founders who fundraise. And just a few words about Bethany. She's a senior counsel and FemTech practice lead at Nixon Wilk Law. She empowers pioneering FemTech and healthcare innovation companies to achieve their goals with well-crafted legal counsel and strategic guidance. She partners with emerging digital health companies at the forefront of healthcare transformation to ensure they'll be building robust, scalable, and legally compliant companies to lead the industry. As part of her role, she also helps FemTech companies to navigate the fundraising landscape, including the unique challenges that arise for female founders, and help her clients negotiate contracts with investors. Her strategic guidance and insights have been featured in top news outlets such as Forbes, Fortune, Teen Vogue, Vice, BBC, NPR, and some others. And Bethany is also the host of the amazing podcast, Legally FemTech. Bethany, it's so cool to have you here. The floor is yours.
Thank you so much. I'm so grateful to be here and really appreciate you having me. I have just a very short PowerPoint presentation that just hits the highlights, so I'll share and hopefully you can see that. But what I'm here to talk about today is really the top concerns from a legal perspective for FemTech founders as they're starting to fundraise and think about fundraising and getting that type of investment into their companies. And so I'm going to focus on three main legal concerns that we see quite often for FemTech founders. And specifically, I'm going to talk about structuring your company, why that's really important to have a solid structure that is quote unquote standard in place before you go to try to attract investment capital. I'll talk about some of the important legal agreements that you'll want to make sure that you also have in place for attracting capital. And then I'll talk about protecting IP rights. I know that IP rights are quite a hot topic among FemTech founders and founders of all different types of businesses. And it's very important that you make sure that your company owns the legal IP and protections that your company is going to need to thrive and to grow. So I want to start first by talking about structuring your company. So there are numerous different types of structures that a business can assume, including things like sole proprietorships, partnerships, limited liability companies or LLCs, corporations, professional corporations, and cooperatives. And if you're not as familiar with these different types of corporate structures, it can be a little overwhelming to try to sift through them and understand which ones you need to have in place in order to attract and retain capital. So your business's structure is going to influence all of your key decisions. From, for example, how much you pay in taxes, right, to your ability to actually raise money, to the personal liability that you have for your company. And so it's really crucial that you select the appropriate vehicle for what you're trying to accomplish with your company. And for that perspective, right, there's a couple of different structures that you can choose from. The one that you are going to see most commonly used is the corporation. And there's a couple of reasons for that, though you may alternatively choose to structure as an LLC, but those are kind of the two corporate vehicles you're going to see most often used if you're looking to grow and scale your business. So let's talk first about the corporation. So venture capitalists, when they're performing due diligence, they're going to want to make sure that you have a standard corporate structure. And if you have material deviations from that structure, that can actually raise some red flags to the investor and either cause them A, not to invest, or B, to say that you need to restructure before they will invest. So most venture capitalists are going to want you to be structured as a corporation, oftentimes incorporated in Delaware. So if you're a corporation and you want to become a corporation, right, corporations are easily filed they're actually easily created by filing what are known as articles of incorporation with the Secretary of the state for the applicable state where you're incorporating your company. And corporations are going to be managed by shareholders, they're governed by board of directors, and the company is run by the officers. It's managed by the officers. What are the benefits of having a corporation? Well, it's typically the preferred vehicle for investors, so it's going to make attracting investment much easier for you to do because you have a solid corporate structure that investors are familiar with. It also has the advantage of being a very distinct legal entity from its owners. What that means is that owners are not typically going to be personally liable for company actions or for company debts. So there's a separation between the company and its owners. And that's really important whenever we think about the inherent financial instability that accompanies startup companies. It's also going to make raising capital a lot easier because you can raise money through stock sales. And corporations can also continue to operate if a shareholder leaves or if, the shareholder decides to sell his or her shares. Now, there are drawbacks to being a corporation, and that's why some companies will instead choose to incorporate as an LLC. So corporations typically have to pay taxes on their profits, and they can sometimes be subject to what we like to term double taxation. So that means, right, that the money can be taxed once whenever the company turns a profit, and then it can be taxed again whenever the dividends are being paid out to the shareholders. So if you want to avoid double taxation, one thing that you might want to consider when you're structuring your company is to consider whether or not you can have an S corporation instead of a C corporation. So S corporation is just a tax law label, right? It's not a special type of corporation, but typically there's just a difference here in kind of how the taxation works. So it allows for income to be passed through to shareholders and generally only taxed once. So that's something you want to keep in mind if you're considering taxation, right? How you can kind of get the most bang for the buck here with your corporate structure. If we think about LLCs, right, limited liability companies, they're a good option for entrepreneurs who seek lower tax rates than those that might otherwise be available for corporations. An LLC does allow, right, profits and losses to pass through to the entrepreneurs without having to incur a corporate tax. And very much like a corporation, it does generally protect an entrepreneur from personal liability for that LLC's debts. So you're still getting that protection. Some states, however, will require an LLC to actually dissolve and to reform if there's a change in membership. And so that can mean, right, that ownership in an LLC can be a bit harder to transfer than a corporation. Now, not only is it important, right, for you to choose the right structure for your company, it's also important to think about where, if you're going with a corporation, right, where you're going to incorporate. And as I mentioned a few moments ago, a lot of venture capitalists and investors like you to be a Delaware corporation. And the reason for that is that Delaware has a lot of protections and benefits for corporations and for shareholders of corporations that other states don't necessarily have. Delaware also has a nice big body of law that is dedicated to corporate matters. They also have a dedicated court for corporate matters. And so it's got a very solid foundation in terms of kind of understanding what your legal risk is going to be, understanding how the law is going to apply to corporations, knowing kind of how that's going to shake out, gives you a lot more predictability. The problem with Delaware is that usually the expenses and the filing fees, et cetera, are a lot higher in Delaware. So that's one thing to consider. Another state in which is kind of up and coming for incorporation lately is Nevada. So that's one that's starting to build its own kind of body of corporate law. It's trying to mimic a lot of the benefits that Delaware has. So that's another consideration, and the filing fees may not be as high. The next legal concern that I want to talk about is, what are the important agreements that you need to have in place if you're going to go out and start to raise capital? So it's important for founders to understand, right, that venture capitalists really want you to have a standard set of incorporation documents that are prepared, right, that you can kind of pull out and say, yes, right, I know what I'm doing. Here's my standard set of documents if you'd like to use them. And this can really go a long way to giving prospective investors comfort that your startup is properly organized, right? You've got somebody who's knowledgeable in this space running it, or you've sought appropriate legal counsel, and that you're understanding the industry. So here are some of the documents that you're going to want to make sure that you've prepared. And I'll touch on two of these whenever I go to that third legal concern, which is really protecting IP rights. So the first document that you're going to want to have prepared is either a convertible note or a fast note. Or a safe note, right? So safe means simple agreement for future equity, and a convertible note and a safe are very similar, but they have some key differences. So a convertible note. With a convertible note, investors are essentially loaning money into your startup, which will automatically convert into equity in that first professional round of financing. So it's kind of like a hybrid of debt and equity, and it's one of the primary ways in which startup companies can get funded in that early stage. And then you might also hear it be called bridge financing, because it's financing that is essentially bridging the gap while the company is preparing to set up and go out and raise more money. It sometimes can be set up, kind of like a loan. Now, if we look at a safe instead, right, a safe note is really a contractual agreement to issue future shares in exchange for funds at a triggered event. So that might be something like the end of a fundraising round, like the Series A round. And it's very similar to a convertible note, but it's not a loan, right? There's usually no interest, maturity date, et cetera. So you'd want to make sure that you have kind of a standard template, convertible note, safe, fast document in place, kind of ready to go when you're seeking investment. The other two that I will talk about when I move to protecting IP rights are non-disclosure agreements and proprietary information and inventions agreements, which you'll sometimes see called like a PIIA or an assignment agreement. And then the fourth one that I want to talk about real quickly is the founders agreement. So it's crucial for founders to think about and determine the timelines and the procedures for having their shares vest. So shares are sold to founders, and they're typically subject to vesting and rights of first refusal from the company. And the purpose of that, right, is to keep founders on the corporate team and to maintain control over ownership of the corporation. So a lot of founders, rightfully so, are not interested in vesting schedules, right? You kind of want to have all your shares vested up front. You don't want to necessarily be subject to a vesting schedule. That said, it's really important, and a lot of venture capitalists and investors are going to require you to have a vesting schedule or some sort of vesting timeline. And the reason for this, right, is that shares have to vest over a standard period of time, because otherwise, if you're a founder and let's say that you're in the company for 1 year and you leave, but all of your shares have vested up front, that means that you're going to get the benefit of your other co-founders who are still working at that company without you really having to put in any additional effort, because all of your shares have already vested. And so investors want to make sure that founders are going to be committed to the company, that they're going to stay, they're going to work, they're going to be quote unquote, have skin in the game, right? Be as invested in that company as they are. And for that reason, they'll oftentimes require you to implement a vesting schedule, have your shares vest over time. It just really is also helpful to reassuring the investors, right, that you as a founder are really committed to your corporation. And if you think about and propose a vesting schedule and timeline up front, you may be able to prevent the investors from imposing that on you kind of at their, subject to their terms, right, and their preferences. So that can be beneficial. And then the third item that I'd like to discuss is really protecting those IP rights. So before an investor comes and invests in your company, they want to make sure that your company owns the rights to all of its IP. Or if it doesn't own the rights, it has the right to license whatever IP that it needs. So from the beginning, you should make sure that you've got a non-disclosure agreement available and ready to sign for any employees, subcontractors, contractors, anyone who's really working with your company, for a couple of reasons, right? The main one of which is you don't want your intellectual property to be stolen, right, and sold to other companies who might be getting into this space. Additionally, if you're a founder or your co-founders have created different types of technology or, other types of inventions prior to coming and starting this company, you want to make sure that the company owns those IP rights rather than the founder who can, take off and leave. And so for that reason, you might see a lot of times signing what's called a PIA, with respect to the protecting your inventions and your information. And what that does is it basically transfers the ownership rights to that IP from that founder or that other individual over to the company. And then finally, the last thing you're going to want to think about kind of really upfront for protecting your IP rights is trademarks. You want to make sure that you have researched your company, product, and domain names to make sure that they're not only available, but also that you're not infringing on somebody else's rights, because that name may already be taken. And the last thing that you want is to have a trademark infringement lawsuit. So you want to make sure not only you're protecting your rights, right, you're filing your patents and your trademark applications, but also that you're not infringing on other people's rights. So conducting a preliminary trademark search can be very helpful. Conducting a preliminary Google search, very necessary to make sure that as you get up and running, your branding is going to be protected, because the last thing you want to do, right, is brand one way, get some investment money and realize you've got to completely rebrand, right? You're infringing, now you've got a lawsuit. So those are just 3 overarching high-level legal concerns. Happy to take questions during the panel discussion. So thank you so much.
Thank you so much, Bethany. Solid gold. Hope you all folks took some notes. It is my great pleasure to move to the next speaker. And I'm very pleased to introduce Nelly Margulchik. I hope I pronounced your name correctly. I have no idea. She's going to talk about a very important subject as well, which is the startup and investor fit, why it matters, and how to find it. A few words about Nelly. She is a venture development associate at Life Science Venture Builder, Investor, and Operator, Pioneer Group. Previous to that, Nelly worked as a strategy associate at a company that you might all know. It's called Hertility. It's an award-winning early-stage women's health startup where Nelly was advising on formulating B2B sales strategy and also supporting next round fundraising. As well, she worked in healthcare consulting, advising biotech and pharmaceutical companies on global and regional commercial strategy, and also in biotech venture capital. Nelly holds a master's degree in drug discovery and development from Imperial College London and a bachelor in natural science from the University of Cambridge. Nelly, it's great to have you. The floor is yours.
Thank you so much, Ksenia. And yes, you pronounced my surname correctly. You're probably the first one to do so. Let me just quickly bring up my PowerPoint and we'll kick off. You should be seeing it. Brilliant. So thank you so much again for the introduction. Today, I would like to talk about the concept of startup investor fit, why it matters and how to find it. Just before we dive in, you've already had a bit about myself, but I'll just show you a snapshot of my journey here to this virtual room. I started off getting my bachelor's in Cambridge, and while at university, I dipped my toes in life sciences entrepreneurship through an entrepreneurial competition organized by Global Biotech Revolution, having been selected as one of 100 global young leaders in biotech, and then gave it a go at building my own medtech startup, FemTech. Then my path led to a master's degree at Imperial in drug discovery and development, and afterwards I entered pharmaceutical consulting. That in hindsight, then acted as a bridge to the world of startups and venture capital. I joined the strategy team at an early stage women's health startup, Fertility, that hopefully a lot of us all know, and in parallel worked at an emerging Boston-based biotech VC, XDNA. So my current role at Pioneer Group in the venture development team is really the amalgamation of those experiences together. Pioneer Group is a venture builder, investor, and life sciences campus operator. And in my role, I support early stage entrepreneurs in building their businesses from the ground up. So what's the bottom line here? Why did I recap my squiggly career to where I am now? I suppose the main takeaway is that I've been on both sides and understand both the startup and the investor perspective. So just going to the basics, what does investment actually give to a founder? As a founder, money is often a sore subject, especially in times like this, when the markets are down and recession is looming. Beyond this, in tech, time is money. And that rings very true. An entrepreneur needs funding to get ahead and capture the market share before others get there. While some resort to bootstrapping tech solutions in life sciences, including women's health, the size of upfront investment required to build the minimal viable product is hard to finance for personal means. And unsurprisingly, as you all know, fundraising is tough. CB Insights recently updated their analysis of more than 100 startups post-mortem after they unfortunately failed, and found the top reason for startup failure is running out of cash, and the rest are interlinked with this issue. However, you don't just go to VCs for money alone. If you do, you're missing out. Your investors can also dig into their network and connect you with the best talent that you need to help you hit the next milestone. And finally, investors who believe in you and put their money into your startup will also help you raise the next round through investor introductions, advice on your pitch deck, and preparing you for those follow-on investor meetings. Altogether, you get the capital to build your product and the team, connections to help roll it out, and support in the next round of funding. So what is the startup investor fit? Similar to product market fit that you may be familiar, there needs to be a match between what the startup needs and what the investor can offer. And I've listed here a few key criteria, as you may refer to them, must-have to evaluate the startup investor fit. The first one is industry focus. As a FemTech startup, talking to an investor that only invests in sustainability, for instance, would be for the most part a waste of time. On the other hand, if you have a digital solution in FemTech and you're talking to a health tech focused fund, your chances of success increase substantially. Then there is a geography focus. Similar to industry focus, if you are a startup from Germany and you're talking to UK only investor, nothing is going to come out of it. Most likely the investors wouldn't have the conversation in the first place. Then you also need to consider the stage and the check sizes. The investors can specialize in early stage or late stage funding, and the expectations, what they're looking for, the due diligence processes would look very different between the two. If you compare pitch deck for a pre-seed startup versus a Series A company side by side, the information that they present, the story they tell will be very different. And finally, the less visible criteria are philosophy and value alignment and conviction. Philosophy and value alignment is no less important than the three above. You should pair up with somebody who you like and who is on the same page with you, and who you think, most importantly, can bring value to the table. A good investor will try to spend a good amount of time with founders before making the investment to assess mutual compatibility. Actually, fun fact, the typical investment period lasts longer than the average marriage. So getting to know your partner may not be such a bad idea. In case of conviction, the argument here is pretty straightforward. You want your investor to believe in your idea and be your biggest fan. Without it, you won't be getting value add beyond the money. So what can you do to find this in practice? Do your research. You need to approach looking for an investor similar as you would identifying and understanding your customer. You need to start off with building a VC persona. And once you distinguish the type of investor that you're seeking, create a list of firms that are most aligned with your company. And you can do that through researching online, looking at the VC websites, LinkedIn, Crunchbase, and also asking around your founder network for recommendations. Then you must find your entry point, a shared connection to get a warm introduction. And in a business as venture capital, warm introductions can get you much further than cold emails. And even when you don't share any mutual connections, actively follow and interact with an investor online or at an event to start getting to know them. And finally, when you've secured a pitch meeting, it's as important to gain a clear understanding of how a VC interacts with their portfolio companies. It's not just an opportunity for you to sell your vision, but also for you, the founder, to learn about an investor's style and determine whether they can be supportive and fill the gaps in your company. And remember, your relationship will be a two-way street, and your investors need to be your strongest advocates. So let's take a close look at FemTech. These principles that are outlined may be relevant for FemTech even more than other industries. After all, FemTech is an umbrella term, which applies to various types of software, diagnostics, therapeutics, product services, you name it. Basically, any solution that focuses on meeting female needs and solving their problems. And here I've mapped out some examples, and by no means this map is exhaustive. Within each niche, your ideal investor will look differently. So let's look at two examples. First, you can see Candy Therapeutics, a UK biotech company developing a first-in-class non-hormonal drug to treat frequent symptoms of menopause that was acquired by Bayer. They raised their Series C with Longitude, Forbion, and Advent Life Sciences, all venture capital companies that specialize in IP-heavy therapeutics and diagnostics. On the other hand, there's fertility, very close to my heart. They raised their seed round with Local Globe, a prolific industry-agnostic seed investor, and their round was led by Venrex, a VC that backs tech founders with a consumer focus. And that made a lot of sense for a B2C or B2B2C business. Additionally, they brought angels with expertise in healthcare on board. In both cases, it's evident that not only VCs take the investments, but the startups themselves considered who would be the best investor for them in each case. So as I wrap up, just a few key takeaways for you to remember from this talk. First, understand what you're looking for in an investor. Second, know your audience when you're speaking to investors. Know whether it's a generalist fund or a specialist fund. Do your homework and actually maybe even look up the person you will be talking to on LinkedIn. And finally, really get to know them, not just to impress them and sell them your vision, but for your own benefit. So you know that they're going to be the strongest advocate you can get. Thank you very much for giving me the opportunity to speak to the FemTech Analytics team and the other speakers today. And I look forward to answering everyone's questions at the panel discussion.
Thank you so much, Nelly. I remind everybody to use the chat to drop your questions. We're gonna address them during the panel discussions. We're gonna move on to our next speaker, Isabella Grandich. She will tell us about Gen Z, social media, and FemTech. Hi, Isabella. Let me just real quick introduce you. So Isabella actually did something really cool. She co-founded Boob Blurb. I don't mean that other speakers didn't do something cool. They all did something amazing, but Boob Blurb is a women's health conversation starter card game. It has basically an objective to break down taboos associated with female bodies and promote inquiries about our bodies as well. Before Boob Blurb, Isabella was involved in End Maternal Mortality project, whose materials were donated to the Jigwan state government in Nigeria to reduce deaths of postpartum hemorrhaging. In 2020, she designed a standard framework for the British Standards Institute to evaluate health technology for women's health. And as if that was not impressive enough, she studies biochemistry at the University of North Carolina under the Moorhead-Kane Scholarship. And she is passionate, and she has a hobby of writing a blog, especially about philosophy, women's equity, and scientific progress. Thank you, Isabella. The floor is yours.
Thank you so much. I'm going to go ahead and share my screen. It is so great to be here among some really, really incredible people. I am probably one of the youngest here. I'm 19. I'm studying biochemistry right now in the US. I'm originally from Canada, and I'm really passionate about women's health and FemTech. So it's really exciting to be here because this is the industry that I want to work in. And right now I'm studying. I have the card game, like I mentioned, Boob Blurb, which I'll talk a little bit more, but it's sort of in a really awesome way to connect with my generation, Gen Z, people from other generations, just to talk and hear about the emotion behind this really important industry that we're all somehow connected to. And so I'll go ahead and sort of start talking a little bit about Boob Blurb. I have the website over here, but essentially I started the card game after working at an education company. So I worked with over 1,000 students across North America and Europe on STEM education. And I put together this group for women in STEM because I noticed that a lot of the girls in the program had a lot of insecurities. And I thought, well, they're just as capable as anyone else to be pursuing their passions in biotech or in AI. And so I kind of put together this group so they can talk about their insecurities, so we can build confidence. And I sort of realized how powerful the space where you can designate some place to be vulnerable and to have these conversations. And even though we were supposed to talk about being women in STEM, a lot of the conversations ended up being about periods or about body confidence. And that's kind of where the idea came for Boob Blurb. And it's just been a phenomenal journey the last year and a little bit, playing the game with other people, building the game, getting feedback. I've played it over 100 times at this point, and I've heard so many stories, many of them very heartbreaking, but they've all connected me back to the reason why I think health equity and empowering women is so important. And I've just learned so much. And I know that countless people, after having a session playing the game, have just left either just like a smile glued to their face, thinking that was one of the best conversations I've had in years, or just thinking, wow, like I'm glad I'm not alone in a lot of these struggles. And so it's been just a really phenomenal experiment. And I know I talked a little bit about the program I did before. It was called TKS, and that's kind of where the idea came from. I also worked at the British Standards Institute to design a women's health technology framework. I write a lot on Medium, and I worked with a nonprofit in Nigeria to design a framework. But the thing I want to talk about with Gen Z and with social media and with FemTech is the empathy and that human factor that this game has really exposed me to. And in interacting with people from my generation and people who share similar interests to me, I know the sort of common thread that has really connected us is having really great conversations or hearing an emotional, empowering story. And so as a result of sort of the work I've done, the blog I've written, different ways that I've kept up on social media, people say a lot of these sort of things to me. And I think they're just the kindest, best compliments I can receive. One of which that I get often, because I talk about my menstrual cup very frequently, is that other people have tried this thing. And I remember one time I just brought out my menstrual cup just to show someone what it looked like. And they said, I've literally never seen it. And I said, yeah, it's not as scary as it looks. And then they told me they tried it and now they've been using it for over a year. And it's just so amazing just to know that you can just show someone something, change their entire perspective on what products they want to use, and they'll now go ahead and use it. I've also heard a lot of people say that they're so empowered to learn more about women's health because they read my article or because they played Boob Blurb. And it's just the most amazing feeling. And I think a lot of this is fueled by the empathy and the human connection that I've tried to create with the projects that I've done. So I want to sort of shift gears and talk a little bit about the social media and Gen Z part, which is that when we look at a marketing funnel, going from these inputs to awareness to action, what a lot of people correlate Gen Z with is new forms of social media, especially as different forms of social media have taken over other ones. For instance, TikTok is much more prevalently used than Facebook among like my generation. And I could talk about influencer marketing right now. I could talk about all the ways that Instagram shopping and TikTok shopping is changing among Gen Z. But I want to move back just a little bit and reconnect with this idea of the human brain and the emotion we feel. Because a million years ago, the coolest technology around the block was fire. And now there's 1,000,003 other gadgets. You have all these phones. We're like carrying phones that have more computational power than the supercomputers that sent humans to the moon. And that's really crazy to think about, how we went from fire to all of these expansive things. And yet our brain has been completely unchanged. And so bringing that back to the marketing funnel, we can add all of these new types of technologies and apps and ways that we give people information. But at the end of the day, the generation that I grew up in and every generation has the same brain, except right now, well, before we had our families, our towns, and our religions sort of influencing what comes in. And now we just have anything and anywhere because the internet has connected us with so many diverse people. It's not just about your family or your town. We now travel way more. We get our media and information from so many different news sources. And so the social media that has really changed marketing in many ways for Gen Z specifically has also been swelling us, because all of a sudden you get these like minute-long videos on TikTok and you get so many of them. People are spending hours and hours a week on these apps, and they're just getting all sorts of different information that is not as concise and as consolidated and as consistent as it was when you were just relying on, say, your family, town, and your religion. And what this all leads down to is this analysis paralysis that Generation Z experiences when they know about a lot of different issues. They're passionate about the environment. They know about different racial injustices. For instance, right now I'm in the US, and that's a really big topic of conversation. They also know about gender inequities. And at some point, you can consume a lot of this information and you can follow all the right Instagram accounts or, read things online on your articles, but you can't just constantly be taking in that information to go down that funnel. You have to go from awareness to action. And that's kind of where I think the human conversation part is, because it's natural. Like, it's what we've been doing for years and years and years and years. And that's the thing that I think ultimately makes a lot of people change their actions. And obviously, so societal change and making sure that we like switch up our viewpoints, like for instance, not having racist viewpoints or sexist viewpoints, like that is super, super important, but it's not as quick as building an app, and that sort of social reform is much harder. So we could talk about a lot of things, like I mentioned, with Gen Z and FemTech, and I can provide these slides after. These are some examples. But the point I really want to bring home is that there's going to be a lot of technological change, but at the end of the day, we are all human. And as much as Gen Z has been exposed to new forms of social media, more diverse friendships and viewpoints than ever, they are still human beings. And we have to remember that sort of emotional side when we are trying to change the rhetoric on women's health products, or when we're trying to persuade them to think about themselves or their bodies, or in my case, to change the way that we talk about these topics and make them less awkward. And sort of just to end off, 2 little projects that I'm doing to engage like my Gen Z community and trying to, make a little ripple in the water and hopefully inform other people is, well, on September 17th, I'm going on a 12-hour walk to model inaccessible healthcare in Nigeria. So I used to work in maternal mortality reduction, and this is sort of my way of I'm going to videotape it and show people how hard it is to walk for that amount of time. And I'm a healthy 19-year-old. Imagine being pregnant and doing that. And I'm sort of going to share that. And all a portion of my proceeds from Boo Blurb are also going to go towards a 501c3 called Every Mother Counts. And then Boo Blurb is the card game I have. It ships worldwide. And yeah, it's just my small business and project, but it's been, like I said, a really great way to emotionally get in touch with people. So that's it for me. Thank you so much for listening and giving me the opportunity to speak today. I am so entirely grateful, and it's been such a great experience.
Thank you. Thank you so much, Isabella, for sharing your story, and your experience has been really cool. I'm going to order the Boo Blurb right now. I think now we're off to a small break, and we will see you back in 5 minutes. I encourage you to use the chat. You did use it. I see there was a lot of great messages for Isabella, and we'll be back shortly. Welcome back, everyone. We will be moving on now. And it is my great pleasure to introduce our next speaker, Alara Akasis. I hope I pronounced it correctly. She's going to speak about another important subject, which is crowdfunding for FemTech. And Alara is the founder herself of 3V Technologies, and she works in business development, marketing, and product management of wellness and wearable products. Notably, she builds communities for both product and service startups by engaging them on social media and other types of platforms. Alara, it's great to have you with us. The floor is yours.
Hello, everyone. Thank you for giving me this opportunity. I'm so happy I joined this meeting a bit more earlier than I planned for, because I really had the opportunity to listen the perfect speeches of Bethany, Nelly, and Isabella, and it was a pleasure for me to I enjoyed it so much. And for my part, I believe in my presentation you will hear some parts of speech of Nelly and some kind of information Bethany mentioned, and Isabella as well. And I think it's great about FemTech that we work on the same industry, and we do a lot of things in common, and I find in this community that you all understand me and what I've been through. So I'm very happy here. So today I'm actually going to speak about my recently closed crowdfunding adventure for my startup 3V Global. We raised around $150,000 for around $1.2 million valuation. And in meantime, one of the highlights of our crowdfunding campaign is we actually collected around 1,000 pre-orders just coming from our investors. And I'm going to talk about, equity-based crowdfunding and what does it mean for us FemTech founders. So a little bit about me. My name is Alara Akçasız. I'm joining to this call from Turkey, and I'm co-founder of 3V Global. I built this company around 2 years ago with my mom, and I'm actually a chemical engineer specialized in material science. And throughout this bootstrapping journey, I work with different startups, both software, both e-com and consumer products as SEO and growth strategists. And today I'm here to talk about 3V in our adventure as founders. 3V is actually inspired by the same question of all FemTech founders have: what women want. We saw a gap in breast health, and it's actually a problem of ours with my mom. We were having anxious conversations about boobs in general. We realized that when you talk to women about boobs, they either think of two things. One is boobs are a sexual thing, unfortunately, giving us by the society. We're breastfeeding. Is it gonna look good after giving birth and breastfeeding, etc.? And the second thing is that the fear that we have about our breast health, because mammograms have pain. It's uncomfortable to have a breast exam, etc. So we realized this two uncomfortable conversations around boobs, and just dig in about breast health, and so that the breast cancer itself is a treatable cancer type when early diagnosed. And early diagnosed is actually generally can be managed at home by doing self breast examinations monthly. And we search for this self breast examination itself, go to doctors and did our research, and found that it's not actually hard or giving you pain at home. And we ask ourselves, if this cancer is treatable when early diagnosed, and early diagnosed can be managed at home, why are diagnosed women are losing their life around 40% percentage? That statistics was, a lot for us, and we decided to dig into this problem and create a wearable device that will, make self breast checkups a fun thing to do, non-anxious thing to do, and kind of a wellness routine for you and your relationship with your boobs itself. So basically, it's a wearable device that is connecting with your mobile app. It integrates with your other, menstrual health cycle, apps, and gives you a reminder about when to do your self breast exam, because it actually has a specific date in your cycle. And then when you have this reminder, you will place it inside your sports bra and connect with your mobile phone. It gives you some directions to, move your 3 fingers to left, right, you didn't touch this point, etc. And it gives you the ability to pin your breast surface map with your symptoms, so that when you go to doctor, you give them a great summary of your problem, saying, I have a pain symptom on my left boob, on the right corner, etc., on this specific date of my menstrual cycle. So we're basically doing this awareness plus wearable device. And like most founders, we decided to first build a community on social media mostly. We built this community to talk about, boobs with women. And then when we validate the problem on our head a little, we go and build a prototype of this wearable patch plus a smart bra. And our plan was to directly go to investors, raise money happily ever after, and do a big launch. But I mean, we dreamed of this, but it wasn't the actually ideal way. At the end of the day, you're fundraising, you have an idea, you have a prototype. It's an exciting idea. Yes, it's, solves a problem, but you don't know actually if people are going to buy it. So you didn't validate your product, right? So you go into this fundraising loop. Most of the founders are very familiar of, and we lost a lot of time, by the way, in this fundraising loop, that we had to take a step back and say, okay, what are we doing wrong? And we started analyzing this fundraising loop on our head. We said, okay, we're ready to sell this product. To sell it, we need to produce it first. To produce it, we need to raise money first. And we go to investors and they say, okay, you need traction, you need some kind of validation. But since we don't have a, production in hand, we don't have product in hand, so we don't have attraction. This is very common, by the way, for the first time founders. We somehow come into this loop and couldn't get out. But I'm here to tell you, if there are others like me, it's very logical for investors to ask traction, because these people and these companies are managing money, and they generally want profit, and they're taking risks to invest in your company. And of course, they want to see some kind of traction and some kind of validation. So we decided to, go out this loop and say, okay, we need to raise some kind of money, but at the same time, we need to validate our product. And to see if people are interested, and realize that actually crowdfunding is the perfect way to do so. Because, crowdfunding, it's a simple word. It's funding by a crowd of people, you go to them, explain your idea, your product, your startup, and ask for their money. Can you, like a donation, can you give me some money for me to, take this idea to life and test it out, and try to, raise money from non-certified investor people. And it's the main difference is that you have very small tickets and very crowd of people when compared to normal raising rounds, and with this small amount of tickets and a lot of people getting into your company, if it's equity based, of course, that's called crowdfunding. And it has mainly three types: loan based, reward based, and equity based. And we did an equity based round because we needed this round to be closed very fast. So the best way to convince people other than your exciting product is to give them a stock in return, in a share in return. And we started this campaign and it lasts about 2 months, and we close it somehow. And I want to give you some statistics about crowdfunding. People are really raising money, a lot of money, by crowdfunding. I mean, equity based, loan based, and reward based in total. And by this, how new employment is created, and tickets per person on average is $88. I mean, it's unbelievable. Think of it like friends, family, fools, but it's friends, family, and fools from the street mostly. And on average, people give you $88, but when you put together thousands of people, it makes a lot of money. And of course, other than money, crowdfunding has a lot of perks for us founders. For example, every investor of your campaign is actually can become your community member. These people start to follow you from your social media accounts, give you send you a DM. I love your idea. I want to do something for you other than money. What can I do for you, etc. And these people also, other than loyal community members, they can become your affiliates, your ambassador of product. And also, by the nature of crowdfunding on digital platforms, these platforms has to make some kind of money. So they take some percentage of your raised money to make their businesses. Their business model depends on this. So these platforms actually want you to raise this money. So they are pushing ads on behalf of you. They are pushing your campaign on behalf of you. And without you doing so much of paid advertising, you actually have this amount of publicity, which is created by external sources, which is very important when early stage, because you don't have so much money and you need some kind of organic reach. And why does these things are very important for FemTech? I mean, if there are founders here listening to this, I know you can relate all of this. We have around 1,000 investors in our crowdfunding campaign, and all of our investors bring their female relative to our website, and these relatives actually give us pre-orders. So this creates a huge amount of word of mouth organically. These investors go to their sisters, their mothers, their wife, fiance, etc., and ask for advice about our product. Do you think this is worth of investing, etc.? And this how actually a lot of women heard about our campaign and our product. So they visit our website and let us know that they want a product when it's launched, etc. And also, FemTech is always, I'm I'm pretty sure always solves a real life problem, because we are generally female founded in this industry, and we generally, experience these things by ourselves, and we really bring so much empathy of our products that we really understand our potential clients. So when you put a FemTech product into a crowdfunding platform, people are, oh my God, yes, I feel this, I have this problem, this will solve my very big problems, etc. So they approach your campaign very in a very warm way. And also as well, I'm sure all of you know, we have some problems as FemTech founders on advertisement platforms. We get some kind of shadow ban. I mean, it's controversial. You can talk about it in an hour. I mean, I talk about boobs. I use boob illustrations, and some way Facebook is offended by that. But it's really important to have organic reach, in this industry. So I believe this is a really big asset, to have organic followers coming to you, to your social media platforms, for you to build.
Thank you, Alara. I think we need to move on, unfortunately. Thank you so much. It's such a cool story. It's so important that we speak about it. I anticipate a lot of questions during the panel discussion. Thank you very much. We need to move to the next speaker, and it is my great pleasure to welcome Rachel Bartholomew, who is going to talk about actually how do we talk to male investors about female topics. So Rachel is a two-time entrepreneur, and now she's working at her second company, Hy-Vee Health, which she created after her recent journey as a cervical cancer survivor. And Hy-Vee Health is creating a product that is targeting 1 in 3 women that are experiencing problems with pelvic health or pelvic health complications. Rachel is a graduate of the Waterloo University, and she's been working in various roles in entrepreneurship ecosystem over the last decade. Rachel, it's great to have you. The floor is yours.
Hello. Can you hear me okay? Awesome.
Yes.
Hello, everyone. I'm going to apologize. I'm a little sick, so if I sound a little hoarse, I apologize. My name is Rachel Bartholomew. I'm the CEO and founder of Hy-Vee Health. We're a Canadian company. So hello from the Great White North. I'm here to talk a little bit about male investors and how to talk to them about all these uncomfortable topics, including what Alara was talking about around talking about boobs. I talk about vaginas on a regular with male investors, and it definitely it's a tough challenge. And so I wanted to kind of showcase a little bit of my tips and tricks, some of the obstacles that I ran into, and then some of the tactics that I found that has really been helpful as I've went through. I'm going to bring in some really funny stories and things that have happened to me through this journey. So first things first, my background. I created Hy-Vee Health out of my cervical cancer diagnosis. We're creating a pelvic floor rehabilitation system and platform that helps collect gynecological data. And we secured about 1.3 million in pre-seed funding that closed out earlier this year in January. And this was kind of our first round. And some of the obstacles that I ran into specifically pitching to male investors, I often had to prove my market. I actually was challenged to go through the numbers. I would say 1 in 3 women have pelvic floor disorders. They go, okay, let's look at the total amount of women in North America. Okay, now let's take each of the groups you're targeting. Let's do the math. Oh, okay, yes, it does come to 1 in 3 women. And it's like, thank you for reaffirming my math, but sure. I've had to prove out my passion and my capabilities. And I don't come from the healthcare world, but I am a patient. And I actually recently had an investor tell me that I wasn't passionate about the idea I was trying to solve. And I was like, that I had cancer, right? making this for myself on top of everyone else. And so this was something that I unfortunately had to run into quite often. And then finally, one of the things I'm often challenged on is proving the belief that my company is going to be successful. And I've actually been challenged that my financials are too realistic and that they do not showcase that I believe that my company is unicorn worthy or worthy of millions of dollars in these bloated numbers. And, you know, having that confidence level to put that together and just say, okay, well, here's the bloated numbers, here's the realistic numbers, and here's the super pessimistic numbers is something that I had to go through. But through this fundraise, I was able to secure almost half of my investors as women, and the other half really being great allies in the women's health space. So here's some of the obstacles that I've seen through the research and through some of the things that I've been through. So first things first, FemTech is a young market. I know it's a really hot market right now, but you know, statistics show from McKinsey that there was less than 10 FemTech startups in 2008, and only did the investment and that type of thing start to double until 2016. And so this is really young. Like, you know, we're talking 15 years, and then only recently, you know, in the last like 5 to 8 years, money really starting to flow to this. And so this equals less profitability being shown in the market, less exits, less unicorns that investors love to see. And this really just is what we need to prove the market out. And so having that lack of that information being there creates this unsettlement with this FemTech market. Secondly, statistics show, and Harvard Business Review does a great job of this, shows that investors actually invest in founders that are like themselves, that look like themselves. And so, you know, if we have mostly male founders at the table, 3% of total VC funding is going to female founders. Only 0.5% of VC funding is going to people of color. And we have women, you know, we tend to be more risk adverse, and yet our male counterparts are more risk takers and they can take those risks. And so there's this huge unsettlement at the table where they're looking across at someone that they don't relate to. And this kind of goes into this really amazing article. Everybody should read this. It's called "We Recorded VC's Conversations and Analyzed How Differently They Talk About Female Entrepreneurs." The statistics in this article were insane, and it really highlighted that male investors do talk to female founders differently. This is a huge problem because 70% of FemTech companies have at least one female founder at the table. And with that, you know, they're looking at females as risk versus males as opportunity. And I think that kind of highlights how, you know, I presented my financials. They looked at that more of a risk versus me being realistic and showcasing an opportunity. And subsequently, men are often praised for asking for what they want versus women are often showcased as emotional or, you know, taking into account certain things that really impact how, you know, females present themselves at the table when they're asking for what they need. This ultimately becomes a problem because 15% of investors are women. And so ultimately, when you're coming to a table as a founder, the representation is skewed. That table doesn't have the same reflection back to you. And so I found that that comfort level and that safe space from both sides of the table just isn't there. Especially talking about some of these more quote unquote uncomfortable topics that aren't necessarily openly discussed. And often what I find is there's this accommodation level that we go to comfort the investor when talking about, you know, we go vaginas or sex, and we talk low and we talk down to it. And so this is a big piece that I've noticed in the way that we speak to it. And then finally, there's that massive educational hurdle. And I think part of it is a lot of women don't even know a lot about these topics. It's the way we're taught and the way these things are highlighted. And so one of the other things is investors invest in relevant lived experience. They'll never personally experience the problems we're trying to solve directly. And the key point is directly. And if it is experienced indirectly, they may not discuss it openly. I did have a male investor who had a wife that was going through similar issues, so he was able to connect in that way. But this creates hesitancy in making quick decisions. They have to go back, they have to do more due diligence, they have to learn about the problems and the opportunities a lot more. And these are the outcomes that come out of it. So 25% of money goes to women versus 52% asked, 53% decline rates versus 38% in males, and only 3% of digital health funding goes to FemTech. So here's some of my tactics. Tell your story. I know there was a article going around about how storytelling, women often feel like they have to share their stories. This really is something that I use, and I think it just helps create an open and honest space for dialogue and that educational purpose. And if you share your story, often there's a personal story that might be across the table from you to connect on. And living that story and that problem helps provide confidence that I know what I'm talking about. I understand the problem and the opportunity. Having another female at the table. So this helps bridge trust. So if there is a female investor that you can ask to come to the table, often that person's a power person who can help with the discussions. They may have a personal connection to the problem to bridge that gap. And no, sometimes women don't even know these situations. And this is really a systematic educational piece. Spend a little bit more time on the problem to educate, use layman terms, highlight that this is a systematic problem. It's the way we teach sex ed, to the way we teach doctors, to the way we teach, everyone, FemTech and the problems we're trying to solve is there's such a lack of research and understanding. And this really, really is a huge opportunity to solve. Stick to the data and the facts. Investors speak money and numbers. Well-presented facts and numbers are the language of investors. Provide a clear case to their ROI. They can't really argue that, right? That's the ultimate thing, is to showcase your business opportunity in the market and be confident in those numbers. Do your due diligence on them. So figure out what the fund managers look like, the analysts. Do they have females at the table? Look at their portfolios. Do they invest in FemTech? And do they express interest in FemTech? And then final slide, I know I'm coming up to time. Who are their active allies? Who's investing with them? Ask who syndicates with them and see if they have a history in FemTech industry or fields. And that really can help find people who can be allies across the table from you. Thank you so much.
Perfect, Rachel. Thank you so much. I'm going to introduce our next speaker now, Rachel Brown-Sherrill. It's great to have you with us. She's going to talk to us about building business in FemTech, the must-haves. A few words about Rachel. She has over 25 years of professional experience. She has a successful track record as growth strategist, marketing expert, veggiepreneur, I love this word, public speaker. She has grown some of the world's leading brands and businesses and helped many startups achieve market dominance with a very specific focus on female health and wellness. She works with female health startups in reproductive health, pregnancy, birth control, and arousement. She is also managing partner of Spark Solutions for Growth. She counsels global clients like J&J, Allergan, Pfizer, and Bayer. She was a co-founder and president of Sempre Laboratories, a venture-backed company focused on developing and marketing women's sexual health products that was acquired in 2013 by Innovus Pharmaceuticals. And she speaks broadly on entrepreneurship, leadership. She's also a monthly contributor to Huffington Post and a speaker at many events. She has bachelor's from Duke University and MBA from Stanford University Graduate School of Business. And of course, she also has a bunch of business awards. Rachel, great to have you.
Thank
Floor
you
is
so
yours.
much. It's great to follow another Rachel, a Rachel B. I'm Rachel BS. Can you see my presentation?
Yes.
Okay. Well, thank you so much. I literally agree with every word the first Rachel said in terms of the challenges. So many of these themes will be familiar. Today, I'm speaking about investing and fundraising in FemTech in 2022, and some of the issues that Rachel highlighted also apply here. So probably don't need to go into this because that was such a generous introduction. But basically, the point is I'm in this space. I talk about vaginas all day. I talk about anything from menstruation through menopause. I'm in the business of sexual and reproductive health all day, every day. So I speak this language. I'm speaking to people in this category. I'm working with businesses in this space all the time. So one of the challenges, and I think Rachel alluded to this, is when you're looking historically at businesses that had products for women, there was a very narrow view. You're a menstruating woman, I'm going to sell you sanitary protection. You're a woman who's trying to get pregnant or not trying to get pregnant, I'm going to sell you pregnancy test kits or birth control or condoms or fill in the blank. A woman was defined as having a problem and was offered a solution. And it really did reflect, and to a certain extent, we still see this in many of the conversations, certainly I'm in with investors, that there's a lack of understanding about women's bodies, how they intersect, and how complicated they are. So, for instance, when you look at any of these areas, you can't talk about sexual health without talking about mental health. You can't talk about bone health without talking about cardiac health. So to look at a woman who's menstruating and say, that's all I need to know about her is very narrow and limits the conversation that you can have and the business you can build and the size of the opportunity. So when you actually want to start looking at the complexity, the concerns that women face that we're building businesses in response to, they're big and they're complex. So I talked a little bit about the intersectionality of all these, but you can't talk about gynecological health without sexual health. If you talk about reproductive health, it doesn't just mean when you want to get pregnant or don't want to get pregnant. It's all the steps you take before then and after then, and also includes menopause. Autoimmune diseases that women are at much greater risk of having. And one of the great things that's happened in the past couple of years is we've come up with a better shorthand about how we talk about women's health. So one is we talk about them differentially. So there are things that men have and women have, but they experience them quite different or in different numbers. So take autoimmune health, migraines, so many areas where women are at much greater incidence than men. Or breast cancer, it's not that men don't get it, but it's just much more common and often more severe in women. The second is affect women only. So you have to have the reproductive organs. You can't have ovarian cancer if you don't have ovaries. You can't have you can't have uterine cancer if you don't have a uterus. And the last one is things that affect men and women differently, which is essentially everything. And I think COVID really brought that to light when how men fared under COVID was dramatically worse than women. And if you ask me, in my opinion, having been in this space a long time, one of the reasons that COVID and the whole conversation changed that quickly is because of how much greater it affected men than women. And when we talk about the incidents, these are just a few. We could wallpaper, a conference room or a convention center with the statistics about the concerns. So just to take a few, when I say that these concerns are complicated and complex and represent enormous opportunities, so the solutions need to reflect that. 43% of women have sexual concerns and difficulties at some point in their life. That's 40% more than the number of men who suffer from ED, and that market is decidedly larger. Close to 50%, 1 out of every 2 pregnancies in the US is mistimed That's not to say that it's unwanted or that that ends in termination, but it does speak to some of our limitations or lack of clear solutions or education around birth control. 1.1 billion women will be in menopause in the year 2025. So again, when Rachel talked about this, one of the things that I've seen over and over again is when you're in the room with a male investor, unless they understand this personally, it's a niche. Even when you say over and over again, 1.1 billion people will be in, women will be in menopause by 2025, the fact that the word niche and menopause will ever be used in the same sentence is really ridiculous. So in addition to knowing your numbers and being clear of what you want and having aggressive expectations and being able to demonstrate that you're a leader, you also have to, on top of all that, convince the person sitting across from you that menopause is really a big deal. And I was on a panel recently where a man was talking about, a physician was talking about incontinence, and it affects women much more dramatically than it affects men for a lot of obvious reasons, changing in hormone levels, childbirth, menopause, so on and so forth. And he said, you have to put it in terms of the man. So you should tell the man, if you want him to care about incontinence, that his wife can't go to the theater with him. And I said, hopefully politely, with all due respect, I'm never going to have prostate cancer, but I don't need convincing to know that that's an important and big deal and problem that should require some attention. So that's a little bit dovetailing on what Rachel was talking about, but those issues are systemic when you're trying to build a business in this space. So why now? Why is it a moment? We know that there are hurdles, but lockdown, COVID-19 did a couple of things for us. It gave us the opportunity to think and talk about self-care and pleasure. There was a greater focus on intimacy and sex. There were lots of unexpected players joining the conversation. For instance, the city of New York had some health warning that said, you are your safest sex partner during COVID. You know, so there, a city government is coming out and essentially encouraging masturbation as a way to stay healthy. Women have much more economic power. This is demonstrated in so many different ways, whether it's our role in the workforce or the number of decisions that we make, the fact that we're the decision makers in the household, and we have more access to capital. There are more women with means. There are more women building companies. There are more women starting companies, and this is on a global basis. So when you look at that, these are the things you need to harness when you think about building a business in this space. And as a result of all this, and one of the ways we have been able and will continue to be able to build companies is by changing the conversations. We have different kinds of founders talking about different kinds of companies in a different context with different vocabulary. When I started in this space many, many years ago, there were two discussions on sex. One was porn and the other was sexual disease. Now we have so many more discussions, so much more vocabulary on anything that affects a woman's life, often driven by the people who are speaking today and conferences like this and entrepreneurs who are building these companies. And those suffering are, as we know, creating solutions they need. We're also helping build companies by leading. By leading. We're capitalizing on new materials, technologies, delivery systems. We're harnessing trends in business to figure out how to build successful businesses in this space. And while we have challenges and we could spend weeks and weeks and weeks and months talking about the banning of Facebook and the different standards that are applied, we are moving in the right direction. We are increasingly seeing a larger number of firms, more funds being raised. The market size estimate from FemTech Focus is over $1 billion. These are huge, huge opportunities. Step into this space, understand what you're facing, and know that you can build something because you're focusing on solving important, complex problems. And just as a way, as a last minute tip, keep the conversation going and keep the money flowing. Have these conversations, reach out to investors, reach out to the other people on this call. There is an enormous network and many organizations dedicated to helping you with best practices. You can call people, you can learn from someone else's mistake, you can learn from my mistakes and either make the same ones faster or make different ones. But there is a great ecosystem that has been created. I've been in the space now over 15 years, but has even been created in a much more accelerated way over the past 5 years to build a business in this space, get in that ecosystem, and figure out how to work within it and create opportunities.
Thank you so much, Rachel. Super cool. Just wish you could share more of your knowledge with us, but unfortunately we have to go. We're moving to our last speaker before the panel discussion. It's Kate Batts from FemTech Analytics. She's going to give us FemTech investment overview. Kate is based in San Francisco. She's Director of FemTech Analytics and Managing Partner of Longevity Capital. She's licensed to practice law in California and New York, and she's a lawyer with over 15 years experience as a corporate attorney. Kate, the floor is yours.
Great, thank you so much, and thank you very much for the speakers and moderator and our audience, and for the introduction. As mentioned, I am the Director of FemTech Analytics and Managing Partner of Deep Knowledge Group. Some of you may have heard of it because we've been operating since approximately 2014. It is a consortium of commercial and nonprofit companies, and we are active on many fronts in the realm of deep tech and frontier technologies such as AI, longevity, invest tech, and a number of others. And our activities range from scientific research to investment to entrepreneurships to analytics, media, and a lot more. FemTech Analytics is one of our subsidiaries, and we launched it in June of 2021 with the objective of solely focusing on the emerging field of FemTech. Our activities include holding a number of online webinars, such as today's. We also produce a number of open access analytics. They are usually accompanied by interactive IT platforms. We also provide proprietary consulting services. Speaking of open access analytics, which you can check out on our website, and I'm sure there will be a link in our chat. We have produced a number of those since our inception. And today, I would like to speak about FemTech investment overview as of July 2022. Before I delve into the details, I would like to first elaborate how we view and how do we define FemTech. Because for us, it's a term that's applied to software, diagnostics, products and services that use technology to focus on women's health and wellness. We actually designate 10 subsectors here, such as reproductive health and contraception, pregnancy and nursing, menstrual health, menopause, pelvic and uterine healthcare, sexual health, mental health, as well as women's wellness, such as, for instance, fitness and nutrition, longevity, such as detecting, monitoring, and treatment of chronic age-related diseases, as well as biometrics, and finally, also general healthcare, such as hormonal health, female-specific cancers, and testing and diagnostics. In our report, we actually summarize with mind maps and other tools the 1,400 plus companies in the field, as well as investors, community organizations, R&D centers, as well as the key trends in the field. If we look at the FemTech evolution, let's say compared to 2010, we would see that this field is growing rapidly, especially if we start from 2015. Amongst the factors contributing to that is, of course, the feminist movement, as well as rapid digitalization and increased focus on precision personalized healthcare. Since 2016, at least 100 FemTech companies have been founded annually. If we talk at the regional distribution of FemTech companies, most of them, 51%, are based in North America, followed by Europe with 27% and Asia at 9%. More granularly, if we talk about countries, it's United States with 47% leading the way in terms of FemTech companies, and it is followed by UK with 11% and Israel at 6%. If we look at the FemTech companies by sector, by subsectors, Here, most of them are in pregnancy and nursing, reproductive health and contraception, and menstrual health. This is actually, pretty traditional, but these are the current statistics. If we look at the revenue breakdown by subsectors, 39% of FemTech companies have revenue of less than 1 million, and most of FemTech companies, 45%, have revenue between 1 million and 10 million. If we're looking at the investor distribution by region, here again, North America leads with 69%, followed by Europe at 20%, and then APAC at 8%. And country-wise, US leads by the amount of investment, followed by Israel, UK, France, and Switzerland. The subsectors that receive the most funding, and as of July of this year, it's $16 billion. The leading subsectors are general healthcare, reproductive health and contraception, and longevity. If we look at the funding status and last funding type, so here we actually see a rapidly growing market that includes both early stage companies, middle market companies, as well as publicly traded companies. So far, most companies, meaning 59%, received seed funding, followed by 19% of early stage venture. And according to the disclosed data, 24 companies received seed funding and 15 received Series A funding. And if you would like more details, we elaborate with respect to this in our report. And this slide actually represents the type of funding, and the specific examples of the companies. Again, seed funding leads. I know we don't have a lot of time, and I'm looking forward to our Q&A sessions, so I will focus on the key takeaways. So if we take 2021, it was a rather promising year for FemTech because the amount of funding reached 14 billion, out of which 2.4 billion came from venture capital investments. As of this year, we have 840 million of venture investment, and I mean as of July 2022. And interestingly, since 2015, venture capital investment increased from 600 million to 2.4 billion in 2021. Amongst the key challenges is the access to VC funding, because only 1 to 5% of VC funding goes to female founders or all female teams, as mentioned by some of my colleagues earlier. However, there is also an expanding market trend, which is female fund managers who understandably would be interested in FemTech companies. And also about only 12% of decision makers and 2.4% of partners at VC funds are women. And then finally, in terms of relative amount of funding, it's the companies who focus on gynecology, fertility, and maternity who lead the way in terms of fundraising. And lastly, the key market trends for the near future are the following. Number one is the increased focus on precision medicine. When you combine your genetic data, your general healthcare data, your lifestyle and environment data, and you have either in-home testing and or portable devices that actually allow for the analysis of your health indicators. Another trend is menstrual blood tests, when, for instance, tampons collect blood, and you can use blood to detect certain diseases, such as, for instance, HPV or polycystic ovary syndrome. Another trend is wearable devices, which by 2025 is estimated to reach 16% of the total FemTech market. And the key product types here are innovative breast pumps, as well as pelvic floor exercise devices. Another trend is abortion care, female apparel, and menopause. We mentioned the age wave earlier, so definitely it's going to be one of the growing subsectors as well. So without further ado, I invite everyone to check out our open access analytical reports, including the one I've mentioned. I encourage also everyone to reach out to us, suggest new topics for webinars or topics you would like us to cover in our open access analytics. And Ksenia, the floor is yours. I'm looking forward to the Q&A session.
Thank you. Thank you very much, Kate. Super insightful presentation as usual. We will now have a panel discussion, and I invite all the speakers to come back. If it's convenient, please turn on your cameras. And folks, this is the time you've been waiting for. Drop your questions in the chat. We'll try to answer as many of them as we can. And I would like to kick off with the first question to all of you, and you can decide who will be the first one to answer it. What would be your recommendation for early stage FemTech founders, pre-revenue stage? Maybe like one thing that is super important that that you need to tell them right now. Who would like to start?
I'm happy to go. Two things. Don't spend any time going to VCs when you're pre-revenue. They don't understand the model. They look at something very, very specific. They tend to like 4 straight quarters of month-over-month revenue growth. They do not understand how to visualize your business at an early stage, which is ironic given how many pre-revenue companies VCs invest in. But in women's health, you need to show some demonstration. The second thing I would say, and I'm sure everybody has many, many more, is demonstrate proof of principle. And by that, I mean, demonstrate that people are willing to pay actual money for the thing that you are trying to sell. That is not the same as, the intent to purchase is 75%. They need to see actual hard data, in my experience, that people are paying for what you're selling. And again, keep in mind, Rachel made these points, Kate made these points. That doesn't mean those same standards apply to other businesses, but in my experience, it applies to women, and it applies to women in this broad category of FemTech.
Thank you, Rachel. Anyone else would like to comment? Yes, go ahead, Rachel B.
Follow up on the Rachels. The Rachels can ping pong back and forth. I think the one thing I would say is don't give up. They say that it takes like 100 investor meetings to get your first yes. I think for me, it was about 60, but then layer in the complexities of the market currently with recession and that type of thing, and probably double that. So maybe around 200. So get all your no's in as quickly as possible. Always ask, what can I do better, and iterate on that as you go through. Start with investors that maybe you don't want to target right off the bat, and lead up towards the ones you do want to target. But unfortunately, you got to go through the slug of just meeting with them and getting the no's off the bat, but make those introductions and just keep pushing forward.
Thank you, Rachel. It's true what they say, investment is like marriage, and then we can compare looking for investors as dating. And in the beginning, quite often for all of us, it's very awkward. Anyone else would like to comment on this? Or if not, we can move to another question.
I can add a few things on top of Rachel. As a media buyer perspective, I think it's really important to build, an audience. An audience for your FemTech product, because like I said, you can get shadow banned. So it's really important to build a community before starting anything.
Yeah, just
great insights. Yeah. Anyone else?
I just want to jump in with a few last thoughts from me. I would definitely echo the recommendations from both Rachel and Lara. I think my 2 cents in this is focusing on what matters. We see a lot of early stage founders who come to us and they're hyper focused on getting a long waiting list while they actually haven't figured out exactly who their customers are, what problem they're solving, and how they are solving it. So looking at those 3 is probably the most important thing. And if you can communicate that to investors, some of them are a bit more risk-taking may actually overlook the fact that you're pre-revenue. Probably applies more to life science and deep tech, but definitely try to avoid time waste investors and to make sure that you can get to this revenue stage as fast as possible.
Very, very good point. Thank you so much. Let's try to talk about something else right now, which we already mentioned today. So sometimes, quite often actually, in the FemTech space, it is hard to find balance between launching a product that is helpful to women and at the same time finding the right business model that is going to make investors very rich. So how can we keep this impact and do not sacrifice it while considering future financing options? We already spoke about crowdfunding. We already spoke about bringing female investors to the table, which actually understand what you're talking about. What other ideas might be out there? So keeping the impact and keeping the business model as well.
I'm happy to jump in with just a preliminary thought on this, which is you've got to make sure that there's a synergy and an alignment between the investors in your company and what your vision actually is. It can be very tempting, and I've seen this happen to a lot of startup companies where they get very excited that they have an investor who's interested, right? It's your first investor. It's a very exciting moment. And some people are, they don't necessarily think that they have any power in the relationship, right? They know that they need funding. And it's important to remember that you also have power, right? You have power to say no if it's not going to be a good partner for you and your company, if they're not going to align on your vision and what you're bringing to the table and the way that you would like to structure the business and have it contribute to society going forward. And so I always like to remind startup founders, right, that you have the power to say no. There's always other people out there who might be more aligned with your vision and your values. And those are the people that you really want to partner with. So don't forget that you do have power, and you have the power to pick who you want in your company.
That's a great point, Bethany. Anyone wants to elaborate on that? She was very on point. I agree. Nothing to add. So we have been seeing some beautiful graphs with increasing FemTech market, numbers going up, everything is good. But in truth, from my opinion, the blue ocean of FemTech is getting pretty red. The space is getting pretty crowded. So from your perspective, I would like to understand, are we still seeing increasing interest from investors into the sector, or is it starting to go down a little bit? And maybe what kind of differentiating factors are investors looking at when there are new products entering the space? If somebody can share their thoughts on that.
Yeah, potentially I can start off. I think there's still a lot of interest in the space. I think it is accompanied by, at least in the UK, government being focused on women's health and improving women's health, and then definitely encourages investor attention to the space. I think, sorry, what was the second question?
How do we, I mean, there are so many products. There are so many products out there. As a new product, how can you differentiate yourself entering this market?
Yeah, so I think if you are entering a market and it's already crowded, the chances are some solutions out there that target a similar problem or address a problem that you're trying to solve. But unless you are a copycat of a product, which I'm sure is not the case for 99% of founders, you will have a specific way that you're addressing it that is different from existing solutions. And I guess it's very important for you to articulate what is your unique selling point, to understand it first yourself and then to articulate it.
So I'll jump in and add that I use the expression that it has to be it has to be better, cheaper, faster. There has to be something. You have to understand your competitive set and be prepared to talk about it. And one thing I encourage founders never to say is, well, there's no one else who does this exactly like this while I'm standing on one foot with red hair in New York. So speak about the category from people who are trying to solve aspects of the same problem and be very clear about the benefits your product offers that others might not. So it might be faster, it might be sustainable, it might be higher value, it might last longer. So there's still plenty of room. I do think we're starting to see, and we'll see more consolidation. But we are when you look at the numbers, there's so far to go that if you have a story, a product that works and a way to differentiate, and you have the money and the team, and you have to have all those things, you need to be able to tell a story, whether it's based on your personal history or not, as to why this solution is going to attract interest and generate sales.
Thank you. Yes, Rachel?
Go ahead.
Rachel and then Isabella.
Yeah, just to quickly add, there's so much room. I still think that even if there's competition, we can't reach everybody. So everyone's going to have a chance to reach somebody, and there's so much work to do. And I'm a little biased in saying that I wish more FemTech companies would take the regulatory and research pathway, because there's so much work to be done in that pathway. And that's what solidifies, doctor recommended products and changes the way that we doctor and treat women. And so, the more research we can do, the more gaps we can fill. And those gaps are astronomical across the globe. So there's still a lot more we can do.
Yeah, I totally agree that we don't have to take a scarcity mindset yet. I was recently at like a dinner event for like an alumni association, and it was really refreshing when I was talking to a Toronto-based biotech and software investor, and I used the word FemTech, and they didn't know what it was. And it was really cool to see someone who was really involved with, like, there was one company that did like microbiome sequencing, and I was like, well, did you hear about the vaginal microbiome sequencing? And so it was cool that I was able to like introduce that term, and which kind of shows that, and I know the Canadian market was kind of mentioned in the analytics report. Like, that's such a baby of a market. I think there's so much opportunity.
Thank you.
Yeah. Sure, I will make a general comment in terms of funding in general. So, if we compare apples to apples of 2021, and let's say we'll take VC funding, we would see that as of July, we were at 840 million for 2022 versus 2.4 billion for the entire of 2021. So it is less than last year, most likely. And of course, economy plays a role. We have seen from the charts in our report that seed funding prevails. So something that would require like large, big ticket investments, probably such companies may need to adjust accordingly. I do agree with everyone that there is now, for the past few years, this year included, an increased focus on female health, including amongst male investors as well. I know that I agree with Isabella that not all male investors are very aware of the topic, but once they learn about it, they understand the importance of that, and I think that's a good sign.
Thank you, Kate. Another question that we have, FemTech is traditionally associated with reproductive health and the aspects around it. And we see the funds are also putting a lot of money in that. But are you also seeing some trends emerging around other components of female health, for example, well-being? I don't know, a lot of women are caregivers, right? Everything related to maybe mental health and motherhood, or some other things that women are experiencing that is not necessarily linked to the reproductive system. If you see some trends like that, would be great to share with the audience.
Well, I can just refer everyone again, to our report, because I've mentioned that we designate 10 subsectors. And yes, traditionally reproductive health, pregnancy and nursing were leading factors. Nothing has changed dramatically since then. But now we also see the emergence, comparatively speaking to before, of sexual health, mental health. I've also mentioned women's wellness as well as longevity. So it is happening, unfortunately, so far not at a fast enough pace, but it's there. And I think it's important to bring emphasis to these other subsectors as well.
We also have a question regarding female investors. And one of our participants thinks that they seem to be more risk adverse and come across as only interested in companies and products ready for revenue. I would love to hear your thoughts on that. Do you feel that female investors, while having better understanding of FemTech products, are more risk adverse in your opinion?
I would say risk adverse. I always find they ask better questions. I don't know if that's a hot take or not, but I think it maybe that comes from risk adverse, but I always find the female investors I sit with, and especially like female specific groups, they ask better questions and they go into the real details and really dig in and actually bring experts to the table. And I think it's more of just trying to understand the complexities of the industry and the problems we're trying to solve. So maybe that comes from risk adverse, although, like I said, half of my investors in my first round were female, and we're early stage pre-revenue. So.
Yeah, just to add on that, also really from my personal experience, I can't confirm that. I think I've read an article or two that's talking about this point. I think hypothetically, what I can imagine may happen in some funds when you have a minority in terms of female investors at the table, they may be in a higher pressure environment that leads to more risk adverse behavior. However, in my experience, for instance, at Pioneer Group, both of our investment managers are women. So they lead on our investments and decision making, and definitely not seeing a lot of risk aversion from them.
I would echo those statements. I don't think they're more risk averse. I think years ago, the women who were not starting their own funds, but were working in larger funds, there was increased pressure on them to not look like they were just partial to female investments. Again, even though no one ever says if 98% of your money goes into men, that you're partial to male investments. I think that has changed in the past several years with the increase in the number of companies being formed, as Kate mentioned, as well as, I think really importantly, the increase of women with real investment money, increase in angel investments, and increase of venture groups or investment entities built by women, built for women, focused on investing in women. So I would say the environment has changed, and that's partially due to women making sure that they have a seat at the table and they get to decide where the money's going to go. I think to be a woman in venture capital by definition, or an entrepreneur, you are already way more risk averse than the average person in most other businesses.
Thank you. Thank you so much, Rachel. Have you seen any trends related to pandemic on investor behavior in general, in terms of either being risk averse or investing in some particular technologies? And have you seen also any effects on valuation as a consequence?
I think something to highlight is healthcare tends to be very recession proof. It's something that's always needed. And so I do notice that a lot of investments still do flow towards healthcare. Obviously this recession conversation was a big hit to all of us. I know a lot of big companies took big hits in the US. But also, they're in cryptocurrency and softwares and all these things that were kind of already bloated to begin with. So I think if you've approached your valuation realistically, if you've approached the way you've done your business and you've continued on a good path, and don't go buy Lamborghinis with your fundraising money, I think we're on an okay path. And I know a lot of FemTech companies are in that boat. And so and honestly, I know I'm up in Canada. Our banks have said that our recession actually isn't going to hit as hard as it will in the States. So I think we were all very fearful, and now the numbers are slowly coming out and it isn't as bad as we thought it was going to be. So I think that's the biggest one. Pandemic created an influx of healthcare investments and, in COVID and all these things, but I think it brought it to the forefront, and that's a good thing.
Great. Thank you so much for this comment, Rachel. We have our other specific question here. Do you have any idea of some numbers regarding FemTech investors or FemTech focused funds that are funding clinical testing of health technologies with specific focus to establish clinical validity and reliability? Any idea on that? Very specific question.
I'll jump in again really quickly and say, try to get as much government funding for that as you can. There's a lot of government funding out there to cover clinical testing and viability, reliability, usability, feasibility, all of those things. I know in Canada, we've got majority of our clinical trials covered by the government. So it's out there. So, work towards that versus framing that in the investor realm.
That's a great advice. We have the same situation in Switzerland. I also know that in US, at least it used to be possible to also get rather big grants for kind of preclinical and early stage clinical research for this specific focus. We have another question, and if there are no more questions, we will close with that. Of course, as a new startup, you are looking for VCs. You don't know. I mean, okay, there is network, but network is limited at some point. Are there any online resources, any I don't know, any lists, where should they look for some VCs and the areas of interest of these VCs or private investors?
I can jump in. We actually have a resource on nixongwiltlaw.com if you go to our website, under the latest, we have, it's called Invest in Women 2022 list and also Invest in Black Founders 2022 list. And it's a list of, funds and accelerators for women or for Black founders, and kind of, what they look for, what they're looking at, what types of companies they invest in. So that might be a good resource if you're a female founder or a Black founder to kind of take a look at and see if there's anything on that list that may be a place to start targeting. That way you're not necessarily reaching out to funds that are not within your area of interest, right? Or that have, a track record of only supporting, as we were talking about earlier, male-led products. So that might be a place to just kind of start, but I'm sure that there's other resources out there and we'll let others chime in on those.
Yeah, I will also add that on our website, femtech.health, we have a number of open access, dashboards and mind maps that, for instance, map out the investors, including by region, that as I was mentioning during my talk. So check it out. Hopefully it will be helpful for some.
Yeah, Rachel, you wanted to add something?
Yeah, there are a number of resources, including the ones that were mentioned, FemTech Focus, FemTech Insider. There really are a lot. And I just also want to emphasize that as you're looking for investors, the burden of figuring out if they have any interest in investing in a company like yours lies in the entrepreneur. You have to take a look at what they've invested, how much they invested, what stage they invest in, what their average check size is, not because they're only going to do that, but if you reach out and you don't meet any of their basic criteria, it looks to them like you haven't even done the most basic research. So for instance, if you're looking for a bigger check size, you might very clearly say, I'm interested in speaking to you. I know this represents a larger check size than you typically do, but here are the reasons I'd like you to take a look at this. So it's not only getting the names, it's understanding what they do, figuring out a way to get in and making sure you've done the work to see if you're at all fit. I mean, I do this all day long and I say, this seems to me based on these reasons, this would be a good fit for your portfolio, would love to chat. What do you think? But I've done the work.
Nelly, you wanted to add something on this?
Yeah, just one resource that I came across personally recently and not affiliated with that resource in particular, but I was really impressed by it, and it's a great initiative. It's called Landscape VC, and that's a platform for founders to publish anonymous reviews of how they found the support from their investors, and that can also give you great insight in what it's like to be one of the portfolio companies. That's probably a bit down the line once you've already shortlisted all the investors that you'll be targeting, when you are lucky enough to get multiple term sheets at the table and you're making the choice and differentiation, which one would be a better fit. It's also important to see to ask around and see how they've interacted with their portfolio companies in the past.
Wow, that's a great result. How's it called? Landscape VC?
Landscape VC, yes. It's a pretty new website.
Landscape
so
VC.
I don't think it will be a complete database of all startups around the world. But definitely something to keep an eye on.
Yeah, it's great to hear about that. We're approaching the end. I don't know if there is, I mean, we have a lot of FemTech startups here who are fundraising right now. I don't know if there is like one last thing each one of you would like to tell them, like one key message before we close. If yes, this is your opportunity to do that. You're good? Then I'm going to say good luck because what you're doing is very, very hard and it takes a lot of courage. And I admire everyone on their fundraising journey and wishing you a lot of positive vibes. I would like to thank all of our speakers. You were really amazing. I think you had very short presentations, but they have been so insightful. A great big thanks to FemTech Analytics. You guys are doing fantastic events. You're publishing fantastic reports. I feel that you're really, you're really making a difference in the FemTech ecosystem. And it was my greatest pleasure to moderate this conference. Kate, I don't know if you want to close with some remarks from your side as well.
Yes, well, absolutely. First of all, thank you again to our distinguished speakers, and especially to Ksenia for excellent moderation. I think that we're creating an important momentum, and we need to, keep going at it. We will continue doing our open access analytics and webinars and everything. So we encourage the feedback from the industry, from the audience, to keep the momentum going. And I hope that we will have more online events soon. And thank you, everyone. As noted, this event was recorded. So for those of you who did not manage to be here for the entire duration, you will receive a recording link in a couple of days from now or so. And thank you.
Thank you very much. Good evening and